Hello and welcome to my next video blog for the Medway property blog. My name is Spencer Fortag. I'm the author of the blog, which can be found at www.medwaypropertyblog.com. I'm also the director of Dockside Property Services, a real estate agent covering the Medway towns with offices in Rochester and in Strood. You find me today on Crow Lane over in Rochester, and today I'm going to be giving you 4 reasons why now is still a good idea to buy property as of February 2016. Number 4 in my list is that we're not building enough property. Now, this isn't a Kent problem, it's not a nationwide problem, it's actually a global problem in terms of our population increase. So let's have a look at some numbers. In 1959, our global population was 3 billion. Just 15 years later, it had increased by 1 billion to 4 billion. It has then gone up exponentially with the time distance between each billion extra people living on this planet shortening. As of 2011, our current global population is 7 billion. According to the United States Census Bureau, the prediction for 2024 is that there'll be 8 billion people living on this planet. Now that's only 8 years away. If you look at this graph, you can clearly see that our national house building rate is going down whilst our population is going up. It's not a situation that's going to get any better. In fairness, the government have made inroads to try and increase the amount of houses that we're building, certainly with permitted development, which allows office space to be converted to residential. Coming in at number 3 in my top 4 reasons of why now is a good idea to buy property is the fact that it is becoming harder and harder for private individuals, not landlords, but who want to live in the property, to buy their own property. The Mortgage Market Review of 2014 basically says that mortgage companies can now limit the amount of the loan to a private individual of 4.5 times their salary, plus they have to allow for the fact that if the interest rate goes up by more than 3%, whether or not that person can still afford the mortgage. This has made it much harder for people to fit the criteria. Prices have gone up, which means the salary being earned needs to be significantly more. The salaries have not kept up with the price of the property inflation. So it's simply become harder and harder for private people to buy their own property. In a residential housing market where less and less people can afford to buy their own property, or in fact meet the mortgage criteria to be able to buy a property, it means one thing: rental demand goes up, and as a result, rental prices go up. And that's what we're seeing at the moment. And what I believe will continue. If you have a look at this next graph, you can see some predictions for rental price increases over the next few years. My next reason, number 2, why I believe people should still be buying investment properties is a lack of viable alternative investment opportunities, or in layman's terms, what else are you going to do with your money? For this, I'm going to be showing you another chart which illustrates this perfectly. It shows your return on a £100,000 investment if you had invested in the year 2000 in various different things. In a nutshell, what these figures show is that had you invested £100,000 in property in the year 2000, according to the Halifax Price Index, you would see a return on your investment of 132%. The next biggest grossing return is equities, which shows a return of 83%. Had you invested the money at the base rate, you would have seen a low return of just 52%. So as we can see, property remains pretty much the number 1 way of getting a good return. We now come to my number 1 reason why I believe it now remains a good time to buy property. And this is often referred to as the ripple effect. But let's put some numbers and some stats behind what I believe is the ripple effect and why we're experiencing that in the Medway towns. Now, the central London market is currently underpinned heavily by overseas investment. In fact, a recent study by Jones Lang LaSalle revealed that a massive 81% of new build prime London property is purchased by overseas buyers. That means only 19% of new build property is being purchased by British people. By far the largest sector of overseas purchases is from Hong Kong. And you'll notice from the next graph I'm going to show you, that's running at 17%, which is almost as much as British investors have said. So what does this mean for the Medway property market? We've already discussed that private individuals are finding it harder and harder to buy property, and certainly those wishing to live in central London can almost forget it. The costs are simply too high. So as a result, buyers are looking further and further afield, at areas that perhaps they would not ordinarily consider. The Medway towns is such a prime target for these people due to the fact that we have high-speed transport links and existing transport links to London. So, simply put, people are looking further and further afield, and Kent and the Medway towns certainly is one of the areas on which they're focusing. As a result, prices in the Medway towns are on the increase. I believe now remains a good time to buy property because for the 4 reasons I've spoken about today, I believe that prices are going to go only one way for 2016, 2017 and possibly into 2020. Thanks for watching. If you do have any questions, please email me, spencer@docksidekent.com. My written blog can be found at www.medwaypropertyblog.com.